So, Kevin, as we take a look at the reaction that we've seen from the street here, I mean, a lot of good to be found in the earnings report itself, but really honing in on some of those warning signs on price cuts, cutting into margins, and some of those incentives as well. Do you think the street has it right in their reaction to this right now?
No, Wall Street never has it right when it comes to Tesla. They, however, are right in the short term, right? Wall Street doesn't care about the robo-taxi. They don't care about AI. They don't care about Dojo. They don't care about full self-driving. The street is right to care about what they care about now, and that's near-term profitability. They care about near-term margin, near-term profit. And what did we hear? Well, we didn't hear, as you mentioned yourself, a date on the Cybertruck. We actually heard they're still testing the Cybertruck, which sort of made me scratch my head too. We didn't hear talk about them actually acknowledge that they are indeed advertising, which is something they agreed to do to sort of help boost the near-term profitability and reduce the need for price cuts. Instead, we potentially had hints of more price cuts coming. So all of the near-term ammunition that really said, hey, near-term profitability might be hurt more is what Wall Street got to say, all right, sell.
Tesla reported 47% rise in sales to $24.9 billion for second quarter and have kept its 1.8 million vehicles production goal in 2023. However, due to several price cuts this year, its gross profit margins fell to 18.2% compared with consensus around 18.8%.
Wedbush Securities analyst reiterating a buy today, raising his price target on Tesla to $350. So you actually raise, even though the stock is down and the market's worried about more price cuts. Why?
I think investors aren't seeing forest through the trees because ultimately what's happening here, we're seeing a stabilization from a margin perspective, better than expected in terms of auto gross margins. You look at units, right now they are on a trajectory toward 2 million, and then this is the drum roll, the Super Bowl, to now what I believe is monetization of supercharger, battery, and I think last night the biggest thing from the conference call, FSD talking to another OEM, because this from an AI perspective is ultimately how I see Tesla getting to $1.5 trillion, $2 trillion
licensing
market cap.
FSD to another OEM. I mean, he's
poker move massively played off from a unit perspective. And I think that's why this year, I think this is just the start.
The poker move being lowering prices.
Because if you look at the lower prices, sacrificing prices for demand, it paid off, not just in China, in the U.S. And I think what you're seeing right now with EV play out, you're starting to see this green tidal wave we viewed as the biggest transformation to the auto industry since 1950s. It's Tesla's world. Everyone else is paying rent. And I think last night was just another chess move while other automakers sit there playing checkers.
During the earnings call, Tesla's stock price began dropping when Elon Musk warned investors to expect slightly lower Q3 production due to factories shut down to undergo upgrading. This is a smart move to manage market expectation and upgrade factories ready for new Model 3 production.
What about the factory potential delay of shipments? That was something that was flagged on the call.
Yeah, and
is that a big deal?
Yeah, and that's one where, and to your point, a bit of a downtick, production offline from a manufacturing perspective. See, I view that as really what's going to be the start of a refresh for Model 3s. So I think that's a smart move because you're going to have refresh of Model 3s, you got Model Ys, and then ultimately the Cybertruck, we think production starts around Halloween. I think we will start to see Cybertrucks on the road in the month of December.
You do. And do you think people are actually going to buy them?
I think right now, if I look just where price points are and just what demand looks like from pre-orders, this could be something where ultimately it's $200,000-300K per year as it starts to ramp in terms of Cybertruck. And that's why Austin, if you look at what Tesla's done, Austin, Berlin, of course, China, what we see now more and more, what will be coming out of India and others, they got the scale and scope where no one else has. And I think that's what's starting to play out here. I view Tesla, it's Apple, 2008, 2009 in terms of the story playing out.
I mean, you know, some of our viewers, you've been right, by the way. I want to make that clear.
Tesla share price also take a hit when Cybertruck's precise specification and pricing and start of delivery dates was not very clear and could have disappointed investors. Recently, Tesla posted first Cybertruck built at Giga, Texas on Twitter, showing factory workers crowded around the Cybertruck in their Austin, Texas facility.
Yesterday they had their earnings report out. news on the Cybertruck. Elon talking about how demand is very strong there. They have an update on when they want to actually potentially see deliveries at the end of the year, potentially production. But back on demand, he was very bullish on it. Here's what he had to say.
Demand is so far off the hook you can't even see the hook. So that's really not an issue. I do want to emphasize that the Cybertruck has a lot of new technology in it, like a lot. It doesn't look like any other vehicle because it is not like any other vehicle. And the production ramp will move as fast as the slowest and least likely element of the entire supply chain and internal production.
You must have said there's about 10,000 parts and systems on that car that need to be kind of like, if any of them is a little bit slow or not lucky, as he said, the production slows down. So that's sort of a big deal for them as they ramp up a brand new product. And Adam Jonas this morning talking about how he thinks that Musk has assuaged investor concerns about the fact that he sort of allayed concern that, hey, we're on track. It's going to be this year. Don't be upset.
What's the stock going to do and what could get it moving? Cybertruck's a big deal. The Ford F-150 is a huge deal. That is, they sell about 600,000 of those a year. Ford is acknowledging that they are worried about this vehicle. Investors, when they get on the road, this is like nectar for growth investors, is to see a new type of technology that is getting out into the world. So I think you're going to see that. And I want to just preface that with a piece. I think the Cybertruck's going to be late. I think that what they said in their shareholder deck, they said expect it in the back half of the year. Previously, they had said the third quarter. Technically, the third quarter is the back half, but based on that tweak to the language, I say it comes out in the end of the year. But another month here, another month there, doesn't matter. They announced it in November of 2019. Investors have been waiting a long time, and I think the stock goes up when the Cybertruck comes out.
And I mean, in terms of the amount of breathing room that Tesla has at the moment, as you do have, more of these legacy brands coming in with perhaps cheaper EV options as well, how strong, how dominant do you think Tesla's position is going to remain, at least in the short term?
Yeah, I mean, certainly I expect the pie to continue to grow of electric vehicles, but I think the more time goes by, the more folks end up giving Tesla a try. And I actually think some of the biggest investors of Tesla stock are retail. And now what's really interesting about this is when we look at funds specifically, we can see that only about 30% of funds out of the big 7 stocks have an allocation to Tesla at all, whereas about 71% of funds have an allocation to Apple, or somewhere around 60 to 80% of funds have an allocation to Meta, Nvidia, Google, Microsoft. So Tesla's still a little bit of the black sheep, where you've got a lot of very excited retail who love the vehicle, so they invest in the stock. And actually, the more Tesla continues to sell Teslas, the more retail investors I expect you're going to get, which eventually Wall Street will be convinced by. And that's probably where we end up getting real euphoria for the stock, where we could end up seeing more of a Cathie Woodian price direction, where we're starting to look at the $500-600, maybe even the $1,000+ range for the stock. But it's really going to take all of that happening, more retail, leading to finally seeing those software revenues, to finally seeing Wall Street turn and allocate appropriately to Tesla.
Tesla's Model Y became the best-selling vehicle worldwide in first quarter of 2023. Thanks for watching. Like, share, and subscribe.